Three topics are: number one, S&P 500. We're going to shed some light there on talking exactly where the S&P is trading at now. Sector performances. I would like to go through the different sectors and see which are the lagging indicators, which ones are kind of on top. And lastly, and this has been a big talk this year, but with the CARES Act and some changes they have made, we're going to shed some light on some of those important changes regarding the CARES Act. So let's hop right into it. S&P 500. Obviously, if let's go back 1 week, last week was a pretty volatile week. We had some ups and downs. If you kind of look at the chart, no surprise there. Believe it or not, the S&P did finish positive last week, just shy of 1%, so about 0.72%. So relatively flat from the previous weeks or previous months, for that matter, what we've seen there. I'd like to comment on the year-to-date return of the S&P 500. Right now, the market, or the S&P, is down roughly 9% year-to-date. Okay, so as you can tell, we've had a nice little bear bounce. We still have a little ways to go. Coming off the high, however, that was February the 19th. Okay, the high point of the S&P 500 from today, we're still down roughly 12.7%, just under 13% there. So again, we have some ways to go. I do want to talk about unemployment. Obviously, there has been a rise in the unemployment rate. Another 2.4 million filed unemployment last week. So that brings us up at about 38 million still unemployed. So keep a close look as again, our economy starts to open up here, and hopefully people are getting back to work. Hopefully we'll start seeing those numbers come down, and as the economy sparks. Upcoming earnings. Okay, so keep a close look. Also, two companies, Costco. All right, Costco. This is going to be Thursday this week. Costco is going to be giving out their earnings report. Also, Salesforce. All right, so Salesforce. For those that most people are familiar with Costco, but Salesforce, the ticker. Check that out. Both, however, if you look at the on those two companies, Costco again is up year to date 3.75%. So with everything that's going on, they're still holding strong. And Salesforce, believe it or not, year to date is up about 6.5%. So two great performing stocks this year with all the volatility. So again, that'll kind of show some good earnings, and I think you tune into that again. Thursday will be where they report their earnings. With that being said, let's get now into the sector performances. Absolutely. Okay, so here, folks, you'll see a chart of all the sectors and the ETFs. Again, the left side gives a little description of which sector we're referencing, and on the right side is the year-to-date or the quarter returns. Let's focus our attention right now on the third column, the QTD, the quarter-to-date returns. If you look at there, again, finally, we're all in the green. Everybody's a winner there.
Everybody's a winner.
So we've had a really, really nice bounce here. We call it a bear market bounce because we are technically still in a bear market, but we've had some nice returns here the last few months as the market's coming in. We focus our attention on the year-to-date return. Okay, again, all reds except for one ETF there, and that's the technology sector. The technology ETF is now up about 4.8, just shy of 5%, right at 5% for the year. Okay, so that's been a pretty good return there. With everything being said, it's definitely been volatile, but again, I mentioned this last week, but keep in mind, folks, 40%. Okay, 40% of that sector is made up of Microsoft and Apple. Okay, so we got basically two stocks that is making up that ETF technology sector. And if you look at those individually, they've just been on an absolute tear. So that's kind of helping drive up the performance. Let's take a look at the real estate sector, though. So we go down second to last ETF there, the real estate sector. Obviously, quarterly, not as aggressive as the other ones, but the year to date, it's still down about 17%. So if keep a close look there. Again, I'm very curious to see with unemployment, okay, if people are starting to get back to work and we can kind of shrink those numbers, what that's going to do to our real estate markets. Real estate, again, being down about 17%, but March and April sales were down quite a bit. Okay, so we'll see as we move into the summer months. We'll see if home sales can kind of increase there. I think as long as interest rates stay low, and the Feds obviously have kind of told us that we're going to keep the rates low for a while, so that'll help with new home purchases, home buying. Mortgage rates are low again, but I think a big key factor, Tyler, is going to be that unemployment. Yeah, we have to get that up there. Let's shift over now. The third topic here is the CARES Act. So there's been some changes with everything going on. Tyler, why don't you shed some light on some of those updates temporarily that we have this year going on with the CARES Act?
So yeah, Chris, I mean, obviously you touched on unemployment pretty much being at an all-time high. I think everyone's, taking a hit during these tough times. So there have been some temporary changes put into place through some different acts. The CARES Act is the one that we're going to touch on today. For those of you who don't know what the CARES Act is, it stands for the Coronavirus Aid, Relief, and Economic Securities Act. Again, these are temporary changes. I don't really know if we can say that they're going to be anything permanent, but at least for the time being, again, some major changes. I just want to touch on a couple of the ones that Chris and I really think are the ones to really focus on. First one being for qualified retirement accounts. Normally, if we take those distributions prior to age 59 and a half, we're hit with that 10% penalty on our money. So at least for the time being, that penalty is gone. It's no longer an issue. You're able to take up to $100,000 from your qualified retirement account with no penalty, no 10% penalty. And ultimately what this CARES Act is trying to do is essentially give you more control over your retirement assets. Like we said, obviously people are struggling. So being able to take, those distributions from your accounts and not have to worry about paying those penalties. And especially I think that, a lot of portfolios have really taken a hit. So, taking them at those lower valuations, obviously we don't want to do that.
Sure.
Another thing that we're going to talk about here, obviously the tax deadline has been pushed back from April 15th to July 15th. Normally you would have up until that deadline to make those, last second contributions to the prior year. So normally that would be up in April. But now with that being pushed back, we are now able to make those contributions for 2019 all the way up until July 15th. So if you have not maxed out your contributions yet, you still have time to be able to do so. That's definitely another benefit. And then as far as the RMDs, required minimum distributions. So normally, we would be taking our RMDs, but if you have not taken your RMD for 2019, the CARES Act gives you the ability to defer that RMD until next year. Again, just another way that they're really trying to help people out through a tough time.
Yeah, that's obviously there to try to spark things and to help out the economy and help out the individual population. Those are some nice things they put in place. One of the main questions, Tyler, that we've gotten, I'm looking on the screen here too, is simply if you've already taken your required minimum distribution, if you're on pace and scheduled to do that, like most of our clients are, if you've already taken it, can you pay it back? Can you, let's just say you're in a position where you don't need the distribution, but obviously you're of age where you're required to take it. Do you have the ability to put that back into your qualified account or back into your IRA?
So yeah, so to touch on that, you are able to put it back into your IRA, but I don't want anyone to think of it as, what's the word I'm trying to look for here? Not necessarily reimbursing it. So essentially what happens is if you have taken that RMD, that distribution, and you do want to put it back or essentially reimburse it into your retirement account, it's essentially treated as a rollover, a 60-day rollover. So let's say you've taken your RMD within the last 60 days, within that 60-day window, you have the option to contribute it back to that IRA without any tax penalty. Again, as long as it's within that 60-day window, it's treated as a rollover. So if you do elect to, put it back into your IRA, you do have the option to do so. Absolutely.
Yeah, and feel free to visit our website. We always give information. We post articles and detailed about that, how to do that, and what the changes are and definitions of the CARES Act. But for those that have questions also about, hey, how do I put it back into my IRA, or how is that handled, please call us. We'll be able to assist you with that. We can shed some light and make sure that everything is smooth going back into your IRA.
Yeah, absolutely. And just to give you guys an idea, so the information that we're kind of referencing, you can visit our website, drewcapital.com. We have the CARES Act, like a nice little brochure that kind of goes into a little bit more detail, more than we're obviously able to cover here within, you know, a 20 to 30-minute period. But it'll probably answer a lot of the questions that you may have. But at the same time, if you do have any further questions, I mean, obviously feel free to email us, call us. We're always here, you know, through these tough times. I think it's been a whirlwind for everyone, without a doubt.
Absolutely. So that's going to wrap up our show for today. Those are the 3 points we want to make. As always, we do this live show, Real Time Talk with Drew Capital, every Monday, 1 o'clock. So feel free to, again, email us, call us if you have specific topics that you want us to address next week. We're happy to add that up to on the board. We can answer some questions as well. Thank you all for tuning in, and we hope to see you next week.
Absolutely. Everyone stay safe. Everyone enjoy your Memorial Day, and we look forward to seeing you all next Monday.
Absolutely. Take care.
Take care, everybody.